What's up YouTube? Recently I got an amazing question on my Patreon community about a potentially long bear market in collectibles, and I thought this was an amazing topic to bring to YouTube. If in the end you end up enjoying this video, please consider to leave a like, means a lot to me and is still the best way to show support. If you are a new viewer, also consider to subscribe. Two more things, like I said, this is part of a longer Q&A I did on Patreon, so if you want to join the Patreon, link will be below the video. And second, I have a Discord community with more than 900 members and we are growing quite fast. Also check that, totally free to join the Discord, so there is no reason to not do it. Putting that out of the way, let's go into the topic and I hope you have fun. So the question number one, I'm thinking about the macroeconomic environment for investing. One possible scenario I have considered is a 4 or 5 year bear market in sports cards, in which cards overall gradually slide down in value. How would you approach such a market in terms of practicality and psychology if it comes to pass? So I thought this was an amazing question and I will give you a short answer on this one, but I will try also to bring a bigger topic into this type of conversation. So the reality is, if that scenario happens, that's the magic of being a collector. You never lose, no matter what market you are facing. A couple of things. First, your scenario is possible. I cannot tell you for sure that that will happen or not, but there is a scenario that the next 4 or 5 years, the next 10 years are bad for collectibles. Second, and probably even more important, I do not believe in that scenario. More 4 years or 5 of pain makes very little sense to me when looking at past downtrends as the history price when it comes to soccer cards, to collectibles in general. But what about this year being difficult? That is where we probably share the same sentiment. I think 2023 is probably not the best year, but in the other hand, the sentiment on the market changes quite fast. Sometimes when we don't expect, everything starts going down or everything starts going up in a crazy rate, or there is a steady growth or a steady downtrend. So all of that scenarios are on the table. No one can predict that type of stuff. If you look online and again take this with a grain of salt, you can see that the average bear market lasts not even 1 year, but in the other hand, when the market turns around and there is a bull run, takes much longer. So people that stress a lot about their investment, they feel the bear market a lot in an exponential way. If you are a value investor, this short-term / mid-term pain should not be relevant for you, or at least, again, when I say relevant, I also have to contradict myself on this one. I also buy cards right now that in 1 month from now, I'm checking if I did a good buy or not. That's quite normal. All of us tend to do that. But in the other hand, if I'm holding that card for the future, for the long run, the reality is this short-term or mid-term pain is almost irrelevant. That said, of course, cards are not the typical investment. They have a huge risk associated and low liquidity. So cards are not liquid at all. I have a video on this topic if you want to check basically the topic around liquidity on cards. In other hand, they are quite fun and they can provide you a hobby that you enjoy for years, a sense of community. And that, my friends, if well balanced, of course, is something that I can't put a price, is something that I can't define value. Only you know how much joy you get from collecting soccer, from collecting other sports, from collecting other TCGs. That's up to you. Personally, and again, this is just me, I've been collecting cards since I was 12 years old. I grew up collecting cards. Right now I'm on my early 30s and I still love to find some crazy Magic the Gathering card, some crazy soccer card. This is the type of stuff that I have a huge passion, and this is part of my life, as you can imagine. So that's why the title is That's the Magic of Being a Collector. You never lose, and you need to put yourself in a situation that you never lose, or even if you lose, you would still find something positive. So if you pace yourself, of course, never put more than you are okay losing. You are talking about a very volatile asset, quite risky, even if things go down. And I know I'm repeating myself, but I really believe this is the most important message of this question. Even if things go down the next 10 years, like you said, or the next 5 years, you can still have a great time in the hobby. Most things related with your happiness, with your time outside of your job, they do not provide any monetary positive value. So you also have to have this in consideration. If you look this as an hobby, Well, it is what it is. Even if you lose money, you should almost expect that. Of course, again, I also understand that a lot, even if we collect what we like, we try to collect in a smart way, and I think there is a lot of merits into that. But I also want to push the other side that, again, a collector tends to be quite happy no matter what. Moving on, and like I said, I'm trying to push this conversation to something a bit bigger. So, fear porn, this is the type of stuff that drives me crazy on YouTube, on social media, and you guys are probably aware, you guys probably saw thumbnails like the ones you are seeing on the screen. By the end of this month, something crazy will happen. This was actually by the month of January, and the stock market actually did quite well at the end of the month. I'm picking a bit on Kiyosaki. I was a big fan of him in the past. I thought this book, Rich Dad Poor Dad, was quite good, but recently his content is pure BS in my perspective. Even if you are a fan, it is what it is. I'm telling you what I believe about him. But the reality is this type of content sells very well on YouTube. What they try to do is very simple. They have been predicting a macroeconomic crash in the last 10 years. Of course, sometimes they will be correct, but they basically keep pushing the same content. They keep pushing this fear porn into you that they know there is a lot of people with doubts right now about the market. They are probably looking for some type of confirmation bias, and they start watching this type of content. They think, you know what, things are really bad right now, but if I follow these guys, I will know something that the market does not know. And a lot of conspiracy theories is because of that. It's people that they believe they know something that the normal people they do not know, the sheep do not know. In reality, they are the sheep. In reality, things a lot of times are quite more basic than a lot of these guys try to push into you. And the way this works is actually very easy to understand. A lot of times they tell you everything goes to zero, but they have the solution for you. And guess what? The solution for you is you need to buy their book, you need to buy their, something they are trying to sell, or just the views they get with you. And you need to be careful with this type of stuff. Predicting macroeconomics is so difficult. There is so many variables that we cannot control, and I will play actually a video in a second about that. So, for example, another content creator that is quite famous on that space, on the fear porn space, when it comes to this macro recession that we are expecting at this point, is Graham Stephan. You can see, look, if you don't believe me, just look at the title. The 2023 recession keeps getting worse. The recently video, the 2023 recession just got cancelled. I mean, you cannot take this type of guys serious. They just want the views, they just want to get you into their loop, and they feed the type of content you are probably looking, but probably the type of content that's not good for you. A guy that I actually respect quite a lot is Dave Ramsey, and he said this: sorry to end your fear porn party, but the sky is really not falling. It's definitely scary, and some of the things going on truly do suck, but the sky is not falling. 100% agree with him. I think there is a lot of reasons to be afraid of certain areas of the market, but the reality is, guys, and I'm sorry if you believe in this, no, this is not the worst recession ever. No, things are not going to zero. No, guys, China is okay, is not crashing like a lot of these guys are trying to tell you, and there is no big reset coming. Again, this is just the problem with this is a lot of this type of stuff goes into conspiracy theories that people don't even get they are engaging on. All of that said, I want to play a clip from Warren Buffett, someone that you guys should actually look content online if you like the financial talk, and I thought this was a great explanation about variables, about why even predicting macroeconomics is so difficult. The clip is a bit long, but I think is worth to take a look.
So let's start off and talk about the economy a little bit. And obviously, we've been on a good long run here.
A very long run.
And does that surprise you? And what would be the signs that you would look for to see that things were winding down?
Well, I look at a lot of figures just in connection with our businesses. I like to get numbers. so I'm getting reports in weekly in some businesses. But that doesn't tell me what the economy is going to do 6 months from now or 3 months from now. It tells me what's going on now with our businesses. And it really doesn't make any difference in what I do today in terms of buying stocks or buying businesses, what those numbers tell me. They're interesting, but they're not guides to me. If we buy a business, we're going to hold it forever. So we're going to have good years, bad years, in between years, maybe a disastrous year some year. We care a lot about the price. We do not care about the next 12 months. Economic predictions just don't enter into our decisions. Charlie Munger, my partner, and I, in 54 years now, we've never made a decision based on an economic prediction. We make business predictions about what individual businesses will do over time, and we compare that to what we have to pay for them. But we have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right.
All right, so you don't pay much attention to the dismal scientists then, I guess.
Well, I pay none in the sense of as a guideline to doing anything. It's entertainment. I mean, it's like going to a variety show or something like that. But and I just don't know of any economist that actually has bought businesses successfully or done well in stocks. Paul Samuelson did. You may know he was a big shareholder of Berkshire, but it's, they make guesses, and there's so many variables. I mean, in the hard sciences, you know that, if an apple falls from a tree, that it isn't going to change over the centuries because of anything or political developments or 400 other variables that go in. But when you get into economics, there's so many variables, and the truth is, you've got to expect good times and bad times in business. And if you were to buy an auto dealership and you're, wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort.
So not a lot I can add into that. I thought that was a great clip. That's why I really wanted to share with all of you guys. And I know there will be a smart Andy in the comment that will say, Andre, yeah, that's great. But Warren Buffett or Charlie Munger, they probably don't agree with you buying cars. And you are correct on that. But like I said, for me, it's an hobby. For me, it's a passion. And I think you guys probably understand that. And my final conclusion to this, and is trying to almost direct answer the question, is quite simple. If the market goes down in the next 5-10 years, I will continue to buy if my passion for collectibles is still as intense as it has been for the past 20 years. That's simple. I don't try to overcomplicate stuff. I think, honestly, like Warren Buffett said, there will be good times and bad times, and we have to accept that. Hope you enjoyed this answer. This is actually part of a Patreon Q&A, a long Q&A I did a couple of days ago. I make a Q&A every week, so if you enjoy this type of content, this is the type of content you find on my Patreon, link below the video if you want to join. By the way, I also have a Discord community with more than 900 members, so also check that below the video. And see you guys next time. Bye.